The capitalization of listed equities grew by 37.31% from 6.54 trillion naira to 8.98 trillion naira, or about 58 billion US dollars. The NSE All-Share Index gained 35.45%, and average daily turnover for equities was 2.65 billion naira, or about 17 million US dollars, which was up 2.71%. The Nigerian Stock Exchange closed the year with 2 new equity listings on the main board, while the bond market recorded an increase in the value of new issues, up 55.61%, with the listing of 10 new bonds. The NSE completed a key stage in the implementation of its new trading platform, XGen, commenced an equities primary market making program, along with securities lending and short selling, introduced a comprehensive suite of value-added services, X-Value, and concluded strategic investments in 2 alternative trading platforms. The implementation of Nigerian government policy on fuel subsidy in January of 2012 stalled economic activities at the beginning of the first quarter, the result of which was felt in the capital market through the first half of 2012. There was more excitement in the second half of the year, with steady growth across most sectors, and the inclusion of selected Nigerian government bonds in the JP Morgan Government Bond Index emerging markets. Local investors started coming back to the equities market, accounting for 44.3% of total market activity as of November 2012, up 38.38% from 2011. The NSE continued to execute around the 5 pillars of its transformation strategy. 1. Targeted business development. 2. Enhanced regulatory programs. 3. 21st century technology strategies. 4. Enhanced market structure. And 5. Investor protection initiatives. The exchange continued its capital market development efforts to create a modern establishment that competes effectively with other exchanges globally. The Nigerian capital market will continue to face challenges around liquidity and depth in 2013. However, there is a concerted effort to drive improvements in market participant experience. The CBN's effort to achieve single-digit inflation and a lower MPL should have a positive impact on the equities market. And as investors' confidence measures implemented by the NSE mature, we expect that a growth trend similar to that experienced in fourth quarter of 2012 will extend into 2013. On the fixed income side, we anticipate the relative attractiveness of FGN bonds will continue for local and global investors as a result of record high yields. With the upcoming inclusion of Nigerian FGN bonds in the Barclays Emerging Market Local Currency Bond Index, this should keep the nation's bonds in the international spotlight. Furthermore, foreign issuers such as the International Financial Corporation, IFC, are expected to enter the Nigerian bond market this year. Other contributing factors to optimism about the capital market include: 1. Early passage of the national budget, which creates an impression that fiscal policy is being prioritized. 2. The pronouncement to begin investing proceeds of the Sovereign Wealth Fund in March of 2013. 3. elimination of VAT and stamp duties, which should take effect in 2013, freeing up funds for capital market investment. 4, continued product innovation by the exchange, such as the commencement of secondary bond market trading and the introduction of new indices and ETFs.